Now, we will now move on to another important discussion for the day, and it is revolutionize the precious metals supply chain. The session will begin with a presentation by Mr. Terry Heymann, CFO, World Gold Council, on the topic ESG criteria, the new paradigm for precious metals supply chain. Mr. Terry Heymann is CFO, overseeing finance and operations. Terry has broad experience across the gold supply chain. During his time with the World Gold Council, he has led the development of the conflict-free gold standard, the first industry-led scheme to set out responsible business practices in conflict-affected areas. He has also led the development of the guidance note on all-in costs, which has been universally adopted by the gold mining industry to improve the transparency and integrity of their financial reporting. In addition to his role as CFO, Terry also oversees the World Gold Council's work on standard setting for the industry. Ladies and gentlemen, let's give a warm welcome to Mr. Terry Heymann, please.
I'm going to talk about ESG, not about Enterprise Singapore, important as that organization is, but a different ESG. And I'm sure everybody in this room is familiar with the concept around environmental social governance and some of the challenges and opportunities that are facing businesses across the world and are particularly relevant to precious metals sector. So I'm going to talk for about 10 minutes and just sort of set the scene, and then I'm very fortunate today to have a very esteemed panel to set out some of the perspectives as to what the precious metals sector is doing to address these challenges, and indeed to consider the question, is the precious metal sector getting overly regulated in regards to ESG? So, why is it important? Good place to start. Well, it's very clear that investors are integrating ESG into their decision making. You only need to open a newspaper, a financial journal, to find article after article about the role that investors are playing in thinking about ESG criteria and incorporating that into their decision making. The same applies to consumers and ethical choices, and especially the millennial generation and the choices that they make about how to source responsibly. A particular area of focus has been climate change, which is very much a mainstream issue. This has moved from the edges of being considered by a niche group of investors to be really at the forefront, guiding investment decisions for large numbers of asset owners. Again, the headlines speak to some aspect of just how important this topic is and the important nature it has for the future of the planet. Companies are now receiving questions from their investors not only on what they are doing to mitigate climate change and to reduce CO2 emissions, but also, importantly, how climate change is going to impact their operations. And I think we're only going to hear more about that line of questioning and that interest from investors as to how companies are responding to climate change and its implications. As an example, this is just a snapshot, and it is only a snapshot, it is by no means comprehensive, of the number of assets under management that have been committed to act on climate change. Investor groups working collaboratively to try and direct their investments towards opportunities where the companies and the operators are actively managing and mitigating climate change. Trillions of dollars. So this to me says this is a real issue. This is how the world is moving in terms of what expectations are, and particularly when we think about the investment community, this is on their agenda. One particular group who are paying a lot of attention are sovereign wealth funds. And we at the World Gold Council spend a fair amount of time engaging with the sovereign wealth fund community, making the case that gold should be an inherent part of their portfolio. Sovereign wealth funds have been at the forefront of trying to drive positive change on climate change. If you think about the way in which sovereign wealth funds are constructed, They are looking out for the long term. They are thinking about their country's stability over 30, 50 years. They recognize climate change is the #1 issue, and they've actually come together to form this group, the One Planet Sovereign Wealth Fund, to force action on climate change. And we're seeing greater disclosure and greater modeling around what the implications of climate change are and how companies respond. So that speaks a little bit about the current landscape and some of the drivers around ESG and the interest in ESG. What does it mean for the precious metal sector? Well, firstly, I think it's important that this sector is willing to engage on these issues in general, particularly around the dialogue on climate change. For a long time, there's been perhaps a reticence to engage, to be part of the conversation, to recognize that the precious metal sector is part of the broader global economy. We sometimes speak to ourselves. That needs to change. It's also really important to demonstrate a commitment to responsible business practices. This isn't just for the precious metal sector. This is happening globally across all different sectors, but particularly for the precious metal sector, where there is real focus on mining, the need to demonstrate responsible mining practices, and the need to demonstrate responsible sourcing is, I think, getting more important. And we'll hear from some of our panelists today as to what steps are being taken to address this. And then there are, as you all know, some specific challenges for the precious metal sector. This is a sector that has long had a history of unfortunately being used by a few rotten apples for the wrong purposes, and that needs to be recognized and addressed. Doesn't mean there are always going to be easy answers, but it means it's something that we need to look at and think about how collectively the precious metal sector can address those challenges. So let me talk about a little of each of those in turn. Willingness to talk about and engage in climate change. I actually think the precious metal sector has a surprisingly positive story to talk about on climate change. We at the World Gold Council published some research last year looking at gold and climate change, trying to understand how you would even think about assessing the way in which gold is related to climate change and which climate change impacts gold. Our initial findings were actually very positive for the sector. Gold's overall footprint in terms of greenhouse gas emissions is relatively small, especially when compared to other major mined products. On a value basis per dollar, gold is one of the lowest of all commodities in terms of greenhouse gas emissions emitted per ton of material. Not surprising given the value. There's some really interesting research that suggests that for investors who are looking to hold a balanced portfolio from a greenhouse gas emissions perspective, holding gold can actually lower the overall exposure given the relatively low additional emissions associated with gold once it has been mined and refined. And importantly, this is a sector where that is at the forefront of efforts to decarbonize. And if you speak to experts in climate change, that is what they're looking for. How do we move from today to tomorrow? We need to decarbonize, and what are the opportunities there? And some of the ideas and some of the opportunities around decarbonization, if you look at where many of the world's gold mines are, they've historically relied on diesel in particular, and there's a real push to move to other sources, in particular renewables. If you think about the locations of many mines that tend to be in far out of the way places, hard to reach, often with plentiful renewable resources, how can those be used to create new power sources? And that decarbonization potential is actually a very positive story for this sector. If we look at responsible mining, we at the World Gold Council are leading work at the moment to set out an overarching framework that speaks to responsible gold mining principles. There is no shortage of existing standards that address aspects of responsible mining. The challenge for investors is that it's quite confusing. The landscape is complex, and it's not straightforward what actually constitutes responsible gold mining. The work we're doing in setting out these principles aims to address that. And we'll hear more about some of these efforts around responsible mining and indeed responsible practices across the supply chain in just a moment. And then you look at responsible sourcing. And I think this is where we're going to spend most time today in the panel. There are some real challenges in the precious metals sector. KYC and due diligence expectations are getting increasingly robust, and there is increasing drive from regulators to think about how participants in the precious metal supply chain are undertaking their responsibilities with appropriate care and attention, whether it be around anti-money laundering, around conflict and conflict-sensitive sourcing, counter-terrorism financing, environmental approaches, including the use of mercury and cyanide, social issues. All of these, there is increasing questions around how the gold supply chain manages the due diligence that happens as precious metals get passed along the supply chain. The refiners clearly have a critical role to play, and they're well recognized as gatekeepers for this sector. But are the expectations on refiners fair, and how are they placed to discharge those responsibilities? You all know that sometimes this is a supply chain that can be opaque. There is a lack of traceability. And certainly when I go, for example, to my local supermarket in London, the level of information I get about each individual product I buy in terms of where it comes from, whether it's all produced with pesticides or organic, far surpasses the level of information you get when you go and buy a piece of gold. And that seems a little strange given the relative price disparity. And then finally, there's obviously the question of artisanal and small-scale mining, a very important constituent part of the precious metals supply chain. Approximately 10 to 15% of global supply comes from these sources. But how are those communities going to be able to be part of the formal sector given this increase in regulation? And what obligations does it place on them and their counterparties to help formalize that sector? So, a lot to discuss, and I leave you with a thought: are we decommoditizing the ultimate commodity? Are we creating lots of different products, and what does that mean for this market? So with that, I'd very much like to introduce the panelists today. We've got a great panel who are going to talk about these issues and expand in a little bit more detail. So please, everybody would like to come up.
Thank you very much, Mr. Terry Heymann.